Hello everyone, you're on the Crypto Copy Trading Club channel. Here we talk about copy trading. Today we're going to discuss an issue. Why do 90% of people lose money in copy trading? And the most interesting part is they choose the most successful traders. We go to the exchange and take a look. High ROI. We see hundreds of subscribers. We see an ROI of 500%. A large P&L for the subscribers. But over time, most people lose money. Here, for example, with this trader. Everyone thinks the problem is with copy trading itself, but that's not the case. In this video, I'll show the real reasons why people lose money. If you understand this, you'll be ahead of the other 90%. Let's start with the main mistakes. Why people lose money in copy trading. Greed taking over, choosing the wrong traders, not understanding the basics of trading, lack of diversification, copy errors, and a lack of discipline and consistency. And before we move on to analyzing these mistakes, it's important to first discuss the exchange's goal in copy trading and the author's own interests. After all, many people think that the exchange is interested in our losses, that the master of copy trading is in cahoots with the exchanges themselves, and that he wants us to lose our money. But in reality, that's not the case at all. When you open a trade, you pay a commission to the exchange. The exchange only makes money from commissions. And accordingly, if a trader opens a long position, he is only playing against those who have opened a short position. That's the only way it works. And if accordingly the position gets liquidated, then the one who was playing against the trader, against our position, makes the profit. The exchange only earns money from commissions. An exchange is not like a bookmaker's office, where you simply place a bet on whether you'll win or lose. And the more trades we make, the more commissions the exchange earns. That's why it's not in the exchange's interest for all of us to lose money. The exchange is interested in having high trading volumes. The master of copy trading, in turn, is interested in earning commissions from the total investment volume. For example, here we see the total investment volume is $165,000 and the total profit for subscribers. He achieved a 500% ROI, which is $51,000. His profit share is set at 10%. Accordingly, he will receive $5,148 over 90 days. He's interested in having the largest possible total investment volume and generating the highest possible profit. And this is the master's primary interest above all. Of course, he also earns as a trader himself, but most copy trading authors are interested in having the largest possible volume. Of investments, for example, as we see here, $4 million. But we'll talk separately about these masters a bit later. The first problem we're going to talk about is greed. People usually come to cryptocurrency for quick money. We all want to earn not just 100% per year, but 100 to 200% in a single month. And here's an example, like with this author. We see an ROI of 582% over 90 days. This is an astronomical, unreal return. We see that right now this author is successful, but absolutely no. There are no guarantees that this success will last for a long period of time, and that we will be able not just to make a profit, but even to get our invested money back. With such authors with a high ROI, there is always an extremely high risk of losing everything, of being completely liquidated. Understand there are bank deposit investments, which are very small and modest. There are, for example, let's consider business. A business has an annual return. A good business has an annual return of 30 to 50%. Those are very large numbers. But here we see 500% in 3 months. You need to understand that this comes with enormous risks. And first and foremost, you need to eliminate greed from our expectations so that we can earn something in the future over the long term. The next mistake we'll discuss, incorrect choice of authors. And here, for example, I've opened 4 authors. Look at the investment volume and ROI loss. Number of subscribers, investment volume, ROI loss over 90 days. Accordingly, here are 4 similar examples. From this, we can conclude that the number of subscribers and the total investment volume tell us nothing about the author's stability, unfortunately. And unfortunately, we can only see statistics for a maximum of 90 days. Also, when choosing authors, the current phase of the cryptocurrency market as a whole plays a huge role. If, for example, we look at the previous period from April to October of last year, when Bitcoin was actively growing, as was the entire crypto market. Accordingly, there were significantly more authors with a positive ROI in the rankings than after the downturn phase. But after the downturn phase at these points, after October 10th in November, and as we observed on February 7th, only the strongest remain after these phases. And accordingly, it becomes much easier for us to select from the entire group only those who have remained and demonstrated their resilience and stability in the current market conditions. It's better to choose as many authors as possible from the ranking after downturns and add them to a spreadsheet, for example, like the one I created, just as an example, where we record the results every month and initially observe the authors. Alternatively, you can simply add each author to your favorites, and then, accordingly, go to your favorites and review these authors. The next problem is a complete lack of understanding of the basics of trading. For example, let's go back to the Bitcoin chart. We open a long position. Here is our entry point. And accordingly, if the price goes up, we sell here and make a profit. But if the price goes down, if it starts moving downward, then in this area below our entry point, we will have an unrealized loss. It's important to understand that at this moment it's unrealized, but that doesn't mean we've already lost our money. When the price goes back up, we can accordingly make a profit from the difference from our entry point. And many people in copy trading, as soon as they see their master's numbers in red, they panic and turn it off. You need to understand that in trading, every successful, even the most successful author experiences drawdowns. Drawdowns are part of the strategy. It's normal. You need to be able to wait and understand this. Moreover, authors often use averaging. For example, we bought here, then bought here, then bought here, and bought here. And now our average entry point is here. We don't need the price to return to this point. We just need the chart to move like this. We cross here and we sell here. We'll already make a profit here. Not here, but because we averaged our position, we'll make a profit here. The next mistake is the lack of diversification. Often we choose 1, 2, or 3 traders and subscribe only to a few. But by doing so, we expose ourselves to significant risk. Any investor always diversifies their portfolio. And in this case, cryptocurrency is no exception. It is highly recommended to choose 10, 20, 30, or ideally 50 authors and invest your capital in them in equal shares, our capital. This way, we will significantly reduce our risks. The next reason for copy trading mistakes. When we subscribe to an author, for example, in this case, the exchange suggests setting a trailing stop at 20%. But very few people actually understand what this really means. This means that if our trading capital invested in this author drops by more than 20%, the positions will be forcibly closed and we will lock in a loss. Accordingly, here is an example of an author. Over the past 90 days, they had a maximum drawdown of 57%. But if we had subscribed with the exchange's recommended settings at a 20% level, we wouldn't have even reached that point. As soon as the drawdown reached 20%, we would have already locked in a loss and our trades would have been closed. Even though the author, a quite successful one, might have a drawdown of, say, 30%. That is, his positions went down, he averaged down. So we used our trading balance, the price went back up, the author made a profit, but we see a red number on our account. Therefore, if you set a stop loss, you at least need to understand at what level you should place it. For example, I either don't set one at all, or I set it at the 50% level, depending on the author you choose. The next reason is the lack of discipline and consistency. And here, first of all, you shouldn't panic. If we see that the author, as we have already discussed here, has an unrealized loss, that is, our profit is in the red, negative, there is no need to immediately unsubscribe from the author. You need to wait. Again, I repeat, this is part of the process. You also need to regularly withdraw your profits. If you have earned 5 to 10% with the author, withdraw it, please. Let it be your safety cushion. There is no guarantee that over the course of, for example, you might have earned a decent amount of capital with the author over 6 months, but then some kind of crash happens, and as a result, you lose everything. This way, at least you can lock in part of your profit at the current moment, and I regularly recommend withdrawing it. Also, thirdly, be prepared for the fact that portfolio rebalancing is part of the process. By portfolio rebalancing, I mean unsubscribing from and subscribing to new authors. In other words, you need to be systematic in this approach. Accordingly, you need to do some basic analysis. Unsubscribe from ineffective ones and subscribe to effective ones, thereby increasing your profitability. All these mistakes lead to the same result. Most people in copy trading lose money. But the problem isn't with copy trading, the problem is with the approach. And we can fix this if we apply a systematic approach, which will significantly reduce our risks. In the next video, I'll show which copy trading authors I chose and why. Call quickly if you encounter such people in trouble, and start to build your own experience in capitalization, and also subscribe to our channel. Thank you.